Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September 23rd. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the overall markets with some of my market analysis. I do the same thing for you folks out there in these daily market commentaries, but I'm going to go a little bit further, and based on those assumptions that we come up with on that market analysis, are some option strategies that I'm going to show you the guidelines for implementing any given option strategy around your assumption. We don't just go out there and pick a option strategy out of the hat based on that assumption. We follow the guidelines in order to find the specific strategy that fits that assumption the best. All right, so without further ado, let's get on with the economic data. Across the pond, we got some flash estimates. Those are the PMI Purchasing Managers Index. Now remember, anything above 50 is expansion. Anything going below 50 is showing some of that contraction. Well, across the pond, we got the French Flash Services PMI coming in at 47.5, expected to be 52.2. Last month's number was above 50, so we're kind of dipping back below that contraction mark. And remember, France and Germany are the biggest manufacturing sectors in Germany. So with French, we got the flash manufacturing coming in at 50.9, expected to be 50.6, so slightly above that expectations. And they did revise last month's number up almost to 50, coming up just shy at 49.8, so moving it up 0.8% there. Now, in Germany, we got the flash manufacturing as well, and it came in at 56.6, expected to be 52, and again, revising last month's number slightly, but down, staying above 50, though, for Germany. And remember, manufacturing, key sector for Germany and France, both of those above 50, and Germany really having a nice number there. We got the German flash services sector coming in at 49.1, expected to be 53. So again, dipping below on services for for France and Germany. And then we move on to the greater European region, and that came in at 53.7, expected to be 51.5. That's for the manufacturing and services. Again, dipping below 50 at 47.6, expected to be 51.0. So manufacturing starting to ramp up, but we're starting to see these service sectors, that's going to be your restaurants and things of that nature. And while we've seen another flare-ups of the coronavirus in Europe, that could be very well what's driving these, as they're starting to kind of reinitiate some of these lockdowns, or at least keep people in place there. Then Great Britain, we got manufacturing PMI at 54.3, right in line with expectations, and the manufacturing for service sector for Great Britain coming in at 55.1, expected to be 57. Today we have Nestor speaking, and our own flash PMIs here in the United States. The manufacturing coming in at 53.5, expected to be 52.5. Flash manufacturing PMI for the service sectors, for the service sector, 54.6, in line with expectations there. So that's not the most important number we're going to be looking for. We're going to be looking for the ISM, which is the Institute for Supply and Management Purchasing Managers Index. That's the one we look for here in the United States. So that should be coming out here in the next week or so. All right, so crude oil inventories, a drawdown of 1.6 million barrels, worse than the expected drawdown of 2.5 million barrels. So that's showing that there is lack of either supply coming in or an increase in demand. That's going to help this market kind of stay right where it's at, because actually last night the API number, which isn't the one we want to look at, we want to look at the DOE, which is the EIA, which is the main number to look for. I think it was the last night's number came out a lot higher than expected, I believe. I saw somewhere, I don't see it on here right now. I can't find it without really digging into the details there. So it doesn't really matter. We looked at the most important number, and that was a drawdown less than expected, showing there's a higher supply anyway. Therefore, we're kind of just stuck in the road right here at 39, building that volume node out in and around here. I'd like to see it come off a little bit, but holding on to these levels is good. Whereas we're looking at gold futures after settling 2 days below that 1923 area, we are starting to fall, and that is more likely because we are not seeing a stimulus package coming through, and that would weaken the dollar. Well, a weakening dollar would drive people to go to some of these assets like gold, maybe Bitcoin or something like that, but we're seeing some weakness here in this metal, even though we're seeing equities down on the day as well across the board. So it is a dollar weakening play that people were looking for, and I don't think that that's going to happen for them. All right, bonds, again, just treading water right here in the 176 handle. Can't get above or below that handle. I was expecting us to get up closer to the 177 handle in bonds, meaning interest rates are starting to go lower in that regard, but we are just treading sideways here as the FOMC members that are speaking this week are talking relatively dovish, not talking about raising interest rates, saying we need more stimulus probably in this economy and not getting it. So that's what is, I believe, causing some weakness in the equities. As you can see, the VIX starting to move a little bit higher here, but we have the Dow Jones Industrial Average on the lows of the day right now, not near yesterday or Monday's lows, but definitely on the lows of the day and creeping back towards that point of control. I think we're going to see this 200-day simple moving average tested probably either this week or next week, but I definitely think it's going to be tested in the short term and maybe even test this value area low as the equity markets, the closer and closer we get to the election without having a stimulus package passed, are going to start throwing some temper tantrums there. The bank, if we get closer to the election and it looks like the Democrats are going to win, bank stocks are going to get kind of spanked on. All right, NASDAQ near the lows of the day, breaking just below that 1100 psychological mark there, but we are near the lows of the day. Again, not nearly as low as the opening from yesterday, or obviously on Monday's lows, which kind of created a little bit of a bottoming pattern here, but we can see we found resistance at that 50-day simple moving average that I've been talking about. Getting below that is showing long-term bearishness and showing that we are looking at a correction in the markets. We did get that nice doji confirmation yesterday, but just like banging our heads up against the ceiling there and falling throughout the day today. So kind of creating an engulfing pattern, which makes us believe that we are going to revisit this number I was talking about is down there in and around that 10,250 mark, where as you can see I have my Fibonacci lined up there. So I think that we're going to probably look to see this overall market start to trend down towards the 10,250. That's the value area high right here, and that also lines up with the 61 Fibonacci lining up there. That is kind of looking like a major target in my eyes. Plus you got this low volume node. There's a lot of things going on there that would, as a technical setup, make me believe that we are looking to retrace and revisit those areas, because the market likes to get down there to those low volume nodes, because that's a little bit of a pain point. That's not a happy place for most people because they haven't transacted at those levels, so it makes it a little bit more uncomfortable for traders at those levels. All right, E-mini S&Ps, another one that is near the lows on the day, not down or making the kinds of moves that we've been seeing this past couple of months, but still down 20 points on the day near the lows. Going to be interesting to watch this market retest this area. This is the point of control for the volume, which for some reason should be shifted. I'm not sure why my chart's not showing that, but that point of control, I believe, should start to move down as we start to retrace this. Now, a support level of the 23 Fibonacci there lining up with the 32.25. I don't know if that's going to hold. I believe we are going to look down here to the 200-day simple moving average And that is where I believe the market is going to want to migrate to. Again, we have this low volume node right in between those two that will create an uncomfortable situation for the equities. But I do believe that this market is feeling a little bit heavy. Anytime you get that head and shoulders pattern at the top of a move is really a signal that there is a correction that's imminent. So, I've been touting this thing out for a while now, so of course it probably will be something that gets debunked. But at this point in time, we got to stay with looking at those chart patterns and at least protecting ourselves to the downside, right? Adding negative deltas, which you guys know I've been doing already, so I'm pretty comfortable with my portfolio with the way I've got it set up so far. Haven't found any super great opportunities to look at today. And with the E-mini S&Ps near the lows, you can see this is the first green candle that we've gotten today in the market. So the pretty bearish overtones today. Overnight inventory was very long. Flushed those guys out and revisited yesterday's point of control. The one thing about trading the previous day's market profile is you would look to buy in and around this 3268 area, which is the value area low of yesterday. Now, if it doesn't hold that, then you get out. But also something to note is the markets love to revisit old points of control. So that could be something that is a target for the markets in the next upcoming days here. We're going to have to see if this green candle holds on. It could just be a pause where there's been some profit taking, which would not surprise me at all before starting to resume some of this downside. We are seeing pretty good volume. Volatility is starting to spike, and that is because people are starting to add protection to their portfolio. All right, without further ado, though, I will get on with the disclaimer. And we are an educational company. I'm not here to solicit you guys to buy or sell any of these securities or strategies we've talked about. Please note that you need to know your risk parameters and know that there is the possibility you lose money in these markets. So please take a moment to go over this by pausing the video. That's all I got for you. Other than if you can't take that, take it easy.